Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Sofi Technologies' SOFI stock pertaining to where it could be headed in the future. In this video, we will be analyzing two articles, to where the first one is titled, Sofi, Expecting Continued Strong Growth in 2023. So we'll be going over their latest news updates as well as their future projections so we can dictate where the stock price is headed in the future, given professional stock price targets and expert stock price predictions on SoFi stock. After that, we'll analyze an article titled, Is Fintech Darling SoFi Stock a Hidden Gem or a Dud? So we'll be going over the risks that investing into SoFi Technologies involves to determine if it's good for your personal portfolio. For more news updates on SoFi Technologies, go and annihilate that like button right now, comment your thoughts down below, subscribe if you are new, and without further ado, let's jump right into today's stories. SoFi Technologies is a fintech company that essentially operates as a digital bank, and they have seen explosive growth last year, and this growth is anticipated to continue throughout the year of 2023 despite worsening macroeconomic conditions. Lately, investors seem scared regarding the future of SoFi Technologies, but I'm here to put those fears to rest. Because despite macroeconomic concerns, SoFi Technologies has amazing growth potential ahead of it if you plan to hold this company for the long term. The first thing we're going to discuss is their very strong personal loan strength and growth, which is set to continue throughout the years of 2023 as well as 2024. The personal loan industry right now is seeing a giant surge in demand from a plethora of various financial institutions, including SoFi Technologies. This is mainly due because the Federal Reserve is increasing interest rates to get high inflation under control. Therefore, the interest rates on credit cards have reached the highest point since 1991. But what does credit card debt have to do with personal loans? Well, if we look at the picture below, you can see that the total credit card debt increased sharply at the end of 2022 to around $927 billion. If you currently hold a balance on a credit card, your two best options would be either to pay off that debt as quick as you can or take out a personal loan to pay off that credit card debt, because on average right now, a personal loan has a lower interest rate than credit card debt, so you are saving money by doing this. That's why the current macroeconomic is perfect for investors and various people to take out personal loans rather than chalk on more credit card debt. According to LendingTree's research, their data shows that nearly 6 in 10 borrowers take out a personal loan to consolidate debt or refinance credit cards. And this is actually a very wise move to do because it does lower your overall interest rate, thus making it more feasible to pay off your overall debt. Considering the current negative macroeconomic environment and talks about a recession or stock market crash, investors specifically should not be carrying any bad debt, meaning that you should be paying off any loans you have at a very aggressive rate. So normally during a very tough macroeconomic environment, it's beneficial for consumers, customers, investors, and anyone else to consolidate high interest credit card debt onto a personal loan because it lowers that overall interest rate, giving you more margin, and it also gives you the ability to pay off this debt even faster. The personal loan industry is set to continuously balloon in 2023 as personal loans on average have lower interest rates than credit card debt. And personal loans also have a fixed interest rate, which makes planning to pay off debt even easier. So how does SoFi Technologies benefit from this? Well, SoFi benefits from this because they are a personal loan lender. SoFi's personal loan originations grew by 50% year over year, which is in line with their 50% year over year revenue growth. And this trend is set to continue throughout the year of 2023 and even in 2024. Data suggests right now that a personal loan is a crucial part of SoFi's overall growth, so this is going to reflect very positively on SoFi's overall financial thesis. Overall, the personal loan market is anticipated to maintain its strong growth. Therefore, personal loans are going to be a strong growth driver for SoFi Technologies in the year of 2023 and beyond, especially as consumers wisely consolidate their debt by paying their credit card debt off with a personal loan, and then hopefully they pay off that personal loan as quick as possible. This is also going to help SoFi Technologies achieve profitability during Q4 of 2023, which will naturally increase their overall share price, which is going to be very good for SoFi stock investors. Also, I want to point out that during the Electronic Payments Symposium conference, SoFi Technologies has increased their overall deposits from 1 billion up to 7.3 billion, which is absolutely amazing. And they also have tripled their overall membership base from 1.8 million to 5.2 million. These strong growth trends are also anticipated to be seen throughout the next few years by SoFi adding potentially another $2.3 billion worth of deposits. This is going to put them even closer to profitability, and once this company achieves profitability by Q4 of 2023, that is when the growth rate of their overall share price and stock is going to aggressively develop. So despite macroeconomic conditions, it seems that SoFi Technologies is truly hanging in there. On top of the student loan payment moratorium ending, these are going to be very positive catalysts for SoFi stock and SoFi shareholders. That's why this author continues to believe in SoFi's long-term growth, and he says that they are a relatively safe company to invest into right now, considering that they have a very low delinquency rate, meaning that their customers are not at risk for defaulting or not paying back their overall loans. So what does this tell us about SoFi Technologies? Is SoFi a hidden gem, or is it a complete dud? Well, honestly, in the short term, the stock price could trend further down, making them a better buying opportunity for those of you who are not already overexposed more than a 5% portfolio allocation. Like I've said in many videos, I only have a 4% allocation to this company, meaning I have 1% left to dollar cost average my average cost basis for this company, making it an even better buying opportunity for me personally. But once it reaches that 5% portfolio allocation based off of an initial investment, then I'm just going to let the company ride for the long term, and I'm going to focus my investments on ETFs such as SCHD, VTI, and QQQ. However, I do want to make you aware of other financial institutions that I actually own more of than SoFi Technologies. For instance, I own more Charles Schwab and Morgan Stanley, and even Bank of America as well as Allied Bank than I do SoFi Technologies, mainly because these are very large banks that have proven themselves and they are very stable. SoFi is more of a singular risky growth investment compared to more of these blue chip companies, which is why I have more money in these blue chip financial institutions than SoFi Technologies. However, with that being said, I do think SoFi, after their short-term downtrend, will end up making a comeback once the company becomes profitable in Q4 of 2023. Now, if they don't achieve profitability in Q4 of 2023, this is going to cause the share price to absolutely plummet, thus giving us a better buying opportunity. However, with that being said, I am very impressed with SoFi Technologies considering their acquisitions of Galileo, Technisys, and the recent acquisition of Wyndham Capital Mortgage, thus putting them ahead of multiple other fintech companies who are up and coming. Currently, professionals have a buy rating for this company because 8 out of 11 analysts who were surveyed by TipRanks have a buy rating, and the remainder have a hold rating, while none of these professionals or experts or analysts say to sell this company, which is very positive news despite the negative macroeconomic environment we are in right now. That's why I say SoFi Technologies is a long-term play. If you're willing to hold this company for the next 5 to 10 years, then feel free to have an initial allocation no more than 5% in my opinion, and then just let it run for the long term and find a new stock to invest into. But I know you love these updates on SoFi Technologies, which is why I'm trying to keep you up to date. However, as of right now, I am almost fully allocated to this company, meaning that I don't plan to add any more. I'm just going to let the company ride for the long term. So I would love to hear your thoughts down below on what other stocks you are buying right now. What's your average cost basis for SoFi Technologies? I would love for you to comment that down below. Subscribe if you are new, annihilate that like button if you haven't already, and I will see you in the next YT video.